Alright, so let's begin. There are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio and your financial goal? And not only a mutual fund, what should be the right financial strategy, be it for any financial goal? To help you navigate through all of these questions today, I have with me Hemant Ustigi from Wise Invest to help you and sort your questions out. And before we begin, let me also flash our WhatsApp number and email ID where you can note down these coordinates and send across your financial portfolio queries. All right, let's begin. The first viewer online with me is N. Lakshmi. Hello, good evening.
Good evening.
So you're calling from?
Hyderabad.
Hyderabad. Thank you so much for sending us your question, sir. And you want to invest 5,000 in Nifty 100 ETF through a monthly SIP for your grandson. And you're confused between HDFC Nifty 100 ETF and SBI Nifty 100 ETF, right?
Yeah.
Sure. Hemant, how can you help him?
Well, I think definitely if the money is to be invested for a longer period and if the intent is to invest in an index fund, this Nifty 100 ETF is definitely a good option. But since he has to kind of choose between these two, there is HDFC Nifty 100 and the SBI. To my information, I think SBI is offering BSE 100 ETF, not Nifty. If he's looking for another Nifty 100 ETF, then he can look at Nippon India Nifty 100 ETF. Out of these two, HDFC and Nippon, I think Nippon can be a better bet. So if the intent is to invest in Nifty 100 ETF, then Nippon India 100 ETF will be a good option. But in my view, since while this can be a good option, definitely, but if the intent is to invest for 10, 15 years, and if this is going to be the only investment, my belief is that an actively managed multi-cap fund can be a pretty good option because one, you get exposure to all the three segments of the market and that too in a very disciplined manner. And what we have seen, and I think what I expect is when you're investing for such a longer period, having all the three segments, it not only kind of in a disciplined manner, not only reduces the risk, but also enhances the chances of getting better returns. So maybe like a Kotak multi-cap fund can be looked at. Or maybe HDFC multi-cap, one of these funds. But I definitely feel that an actively managed fund can be a better option. But if the intent is again to have even index fund, maybe then a mix of these two can also be considered.
Okay, so that's the recommendation for you, Mr. Lakshmi, and you can consider Kotak multi-cap or HDFC multi-cap as well. All right, let's move on and let's take Mr. Vishwanath V's question. And do we have him on the phone line? Mr. Vishwanath? Okay, I think this question is over an email, and he says that he is an NRI and has a serious doubt regarding REITs versus mutual funds, and he's planning a monthly income after retirement, and after some calculations he's figured out that for 1 lakh monthly income from REITs he needs to invest approximately 1.5 CR. The advantage over here that he sees is no capital loss in the investment because it's going through stock markets, so he wants to know if it's worth it or he should be having a separate portfolio in equity mutual funds, and then over there via SWP he can have his monthly income. And if at all REITs is a better option for him, then he wants you to recommend what kind of REITs should he be going for. So very interesting question, and again a very important financial goal, which is retirement. And Hemant sir, what about having a mix of REITs and equity mutual funds for your retirement income generation?
Yes, Kavita, I think you said it right. One very interesting question, and second is obviously this goal of generating income after retirement is very, very important. I think many retirees struggle in terms of what should be the best option, where the returns can be tax efficient, and also look at investment which can give them an opportunity to also make their money grow. So definitely REIT can be an interesting option, especially if someone is looking at an option for generating regular income. And also looking for diversification. So REIT can be definitely a part of the portfolio, but my belief is that REIT cannot be can be the core of your portfolio. So I believe that, like you rightly mentioned, Kavita, that a mix of REIT and SWP, I think will be an ideal option. What happens in the SWP is that if you choose your funds well and if you draw a reasonable sum, you not only get regular income in a very tax efficient manner, but also it gives you an opportunity to make your money grow. Of course, the growth can happen even in REIT, but like I said, from the diversification point of view, investing in a real estate linked REIT, and of course in the stock market, either through hybrid fund or equity fund can be a great option. So if is looking for option in the REITs, maybe a couple of options I can give. One is Embassy of Office REIT, and then other one is Brookfield India REIT. These are two prominent REITs in India. You can consider one of those. What happens there is most of these REITs, basically the dividend that you get, because the SPVs are not operate for concessional tax rate, which means that they're paying tax. So the dividend can become tax free for you. And of course, depending on at what level you sell in the secondary market, if at all you exit from there, the taxation is different. But I believe that a combination of REIT and SWP will be an ideal for you. I think that's what you should be looking at.
Right. Perfect. Let's move on. And I have Mr. Harsh Jain on the phone line with me. Hi, Harsh. Good evening. You're calling from Mumbai?
Yeah, good evening, ma'am. Yes, I am calling from Mumbai.
How are you doing today? I hope you're home and safe.
Yeah. Heavy rainfall. Yes,
Exactly.
I'm at home right now.
Yeah. Good to know. Tell me.
So, ma'am, I have two questions. Basically, the first question is, I want to review my portfolio. Second thing is, I want to do a lump sum amount of 5 lakh rupees. So I just wanted to know whether I want to should invest in my existing funds,
Sure.
or should I start with a new fund. Also, I have gone through several videos where currently thematic funds are like giving some better returns.
Yeah.
So should I add some of the thematic funds to my portfolio apart from my core portfolio? And if yes, then which one should I select?
Sure. Okay. So, as far as your current portfolio is concerned or current investment is concerned, let me just confirm the names. You have Parag Parikh Flexi Cap, HDFC Index Sensex Plan. You have Nippon India Small Cap, Tata Small Cap, and Kotak Emerging Equity in your portfolio. Is that right?
Right.
Okay.
A total SIP of 33,000.
Yeah. Perfect. And this you want to carry on investing till 15 years.
Right.
Okay. 5 lakh lump sum will be for how many years?
15 years.
Okay, the same time duration. All right. And the sectoral addition also will be for the same time horizon.
Yes, absolutely.
Okay, so 2 CR retirement is the goal, and you are investing for that purpose itself, and you're also open for a thematic or a sectoral theme in your fund. How much will be the additional amount which you might want to invest or step up your SIP with?
So I am stepping up my SIP with 10% every year. So this is my second year.
Good.
So last year it was 30,000. I have increased to 33,000 from this year. And so 10% every year I will be doing an increment of my SIP. So
all right.
This would be...
Got it. Okay. So let's frame a strategy for you. So Hemant, first the existing funds in the portfolio, and then the 5 lakh lump sum. Should he be dividing that money in these existing funds, or you want him to add a fund? He also wants a thematic suggestion from you.
Well, Kavita, I think a couple of interesting questions here. If I were to look at his portfolio, I think the portfolio mix is right. There are 5 funds in the portfolio. Even though there are 2 small cap funds, usually I recommend that maybe 1 small cap fund is good enough. But both are good. He can continue if he wants, because since he also looking to invest 5 lakh rupees as a lump sum, in my view, he can invest in the existing funds. Only thing is he needs to be a little careful in terms of how much is allocating to mid cap and small cap. The Nippon India small cap does not take lump sum money, but I think Tata small cap does. So he can consider that for investment, and the rest can be distributed in the remaining funds. So no changes in the portfolio. All the funds are good, can continue with them. Let me now come to the target. The target is 2 crore. If I assume annualized return of 12% with its 33,000 SIP and this 5 lakh lump sum, if he continues for that, he should be able to achieve his target. But since he's also committed to, step up his SIP by 10%, So my belief is that if he continues this process for the next 15 years, he should be able to get double the corpus of what he can get without stepping up the SIP. So I think he's doing great in terms of strategy. He's doing very well in terms of fund selection. He should continue investing. Let me come to the issue of whether the thematic fund should be there or not. Yes, thematic fund, sector fund can be great addition to the portfolio, but not for every investor. My belief is that if you're an experienced investor, you have built a reasonably large portfolio, and your risk profile allows you that while you're looking at higher return, then you are okay. You can face the higher volatility also. Then at that stage, you can definitely include those. But of course, you need to be very careful in terms of how much exposure you have. Usually, as a thumb rule, maybe 10 to 15% can be invested in that. But my belief is that for him at this stage, I don't think it'll be a great idea because he just started investing. Let him become more comfortable with equity as an asset class. Let him build a reasonable size of the portfolio, and then maybe start looking at sector and thematic fund. Not at this stage, but otherwise, like I mentioned, I think he's doing all right. He should just continue the discipline over the next 15 years. I think like I mentioned, he should be able to achieve his target, maybe much more if he continues to step up his SIP every year.
All right, very well explained. Harsh, is there anything else you want to ask Hemant sir?
Hemant sir, just one thing. The 5 lakh rupees, as you told me to invest in my existing funds, so should I invest in a stagger matter or a lump sum of like 1 lakh rupees each fund?
No, I think it's a great question again, Harsh. Let me tell you that usually if you would ask me about, standalone, saying that, okay, this is the 5 lakh I want to invest for the first time, or that's a one-off investment, I would have said a combination of, lump sum and STP. But in your case, you're investing 33,000 per month, right? So you're almost investing 4 lakh rupees in a year systematically. So even if you invest as lump sum, your SIP will allow you to, average it in case there is a volatility. So I think you can go ahead and invest in lump sum.
All the best, Harsh, for the investment portfolio, and hope that helps you achieve all your financial goals as well. On this note, let's take a quick break, and post that our viewers are connected, and they will be asking their financial portfolio queries. Just in case you're watching the show live and want to send across your questions, you can WhatsApp us your query on 8657974571. You can also email us your question on themoneyshow@etnow.tv. See you after this quick break. Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and we are answering your portfolio queries live. And with me is Hemant Ustagi. Let's take Utej Rao's question. He's live with us on the phone line. Utej, hi, good evening. You're calling from?
Yeah, hi, Kavita. Good evening.
Hi. Okay, so you want to invest 30 lakhs in mutual funds, is that right?
Yeah, actually, I want to invest 30 lakhs in mutual fund. So I'm planning to invest 15 lakhs each in multi-cap and mid-cap fund. And my investment horizon is 3 to 5 years. So is this right in time to invest, or can you please suggest?
Sure. So you figured out Nippon India multi-cap and quant mid-cap funds for yourself, right?
Yes, that's correct.
Time horizon is only 3 to 4 years?
3 to 5 years.
3 to 5 years, okay. Okay. And this is only for 15 lakhs or entire 30 lakhs you want to invest in these two funds, or you want suggestion to invest in these two funds?
15 lakhs in each.
15 lakhs each. Okay. Okay. So let's get this answered. Hemant, do you think these categories would be too aggressive for a time frame of 3 to 5 years? And can he have more than 2 funds to stagger it, the 30 lakhs amount in 4 funds, at least 4 to 5 funds? Is that possible?
Yes, Kapita. I think there are a couple of things he needs to consider here. One is he mentioned about his time horizon from 3 to 5 years. Now, obviously, some amount of clarity or being very sure about exactly what the time horizon is can help. Because the issue is that from 3 to 5 years when investing in an equity fund, it can make a huge difference. So if I assume that, let's say, he may be able to keep it only for 3 to 4 years. So while, he may feel that there is sufficient time to invest in equity fund, but my belief is that that's not long enough time for him to take the risk of going into a pure equity fund or investing the entire amount in equity fund. Although I would say that the fund that he has chosen are good quality funds. Usually, you can have those funds in your equity long-term portfolio, but here the issue is the time horizon. So my belief is that one, he should be looking at a combination of hybrid fund and equity fund. So maybe three funds for 10 lakh each. One is a balanced advantage fund, one could be equity aggressive hybrid fund, and one could be in large and mid cap category. Which means that you are investing primarily in the top 250 companies in terms of market cap when you're investing in an equity fund. So it could be ICICI Balanced Advantage Fund where you can invest 10 lakhs, Kotak Equity Hybrid, which is aggressive equity hybrid category, where 65-70% is invested in equity and the rest in debt, where again 10 lakh can be invested. And then HDFC large and mid cap, where a minimum of 35% would be invested in large and mid cap, and the remaining 30% at the discretion of the fund manager, where again 10 lakh can be invested. So I think a combination of these three. Now the issue is, how should the money be invested? Should it be invested in one go or maybe in a staggered manner? Again, because it's a lump sum one-off investment, my advice would be that it should be a combination of a lump sum and in a staggered manner. So maybe 30-40% can be invested as a lump sum, and the remaining over the next few months systematically through STP. If there is a volatility around the budget or after the budget or for some other reason, I think there will be an opportunity for the investment to be made at a lower level. So a combination of, like I said, lump sum and STP, and three funds, a mix of equity hybrid and equity fund. I think that would be ideal for him.
All right. Utesh, is there anything else you want to ask Hemant? ICICI Pru Balanced Advantage, Kotak Equity Hybrid and HDFC Large and Mid Cap is what is recommended.
Yeah, sure. Thank you.
All the best. Let's move on, and I think we have Vijay from Hyderabad on the phone line with us. Hi Vijay, good evening. How are you doing today? Vijay, hi, can you hear me?
Yes, I can.
Hi, good evening. Thank you so much for sending across your question. All right, so you've been doing SIP of 25,000, and since last 1 year, you've got UTI Nifty 200 Momentum 30 Index, UTI Nifty 500 Value 50 and Quant Flexi Cap, Murasset, again one more ETF. Okay, and your time horizon is 25 years for this investment?
Yes, that is correct.
Okay. How much would you want to accumulate after 25 years?
I don't really have a target. I just want to say where would this get me? And it's 25,000 each. It's not 25 split across the plans.
Yeah. Also, any specific reason why you have only? You have Flexi Cap, that's one active, but otherwise you have more passive funds. Any specific reason behind that, Vijay? Okay, I don't think we have him on the phone line, but then let's begin his financial planning. I really wanted to know what's the reason for having all these index and passive investment in his portfolio, but then we don't have him now on the phone line, it seems. Okay, so what would you suggest him, Hemant?
Well, come with a couple of important things here. One, I think the current investment is 1 lakh rupees and he wants to increase it by 20,000 per month. And if he continues that process for the next 25 years, roughly, I think the corpus would be around 40 crores, assuming annualized return of 12%. So that's a great advantage when we talk about starting early, giving your money the time to grow. 25 years is a very, very decent time, very long term. So I think he will reap the benefit if he continues this process in a disciplined manner. As for the composition of the portfolio, there is one active fund called Flexi Cap, and there are three, passive fund, and all three are basically momentum funds. So these are smart beta funds. So what typically happens is, in fact, there is one value and two momentum funds. Now, the smart beta fund can be a great addition for someone who has a larger portfolio, who already has some actively managed funds, because one, they diversify your portfolio, they're cost effective, and they, of course, offer tailored investment strategy. But for someone like him, where you're looking at the core of your portfolio, I think there is a need, so in my view, instead of two momentum fund which are there in the portfolio, go for two actively managed fund, one multi-cap, Kotak multi-cap, and one large and mid-cap, which could be Motilal Oswal large and mid. I think that will be a good combination. You can keep one value fund, smart beta fund, then there's a Flexi Cap fund, and there is one multi-cap fund, and then there is a large mid-cap. I think that combination will be much better in my view compared to having 3 smart beta funds in the portfolio.
Sure. So the strategy should not be active or passive, it should be active plus passive. On that note, it's time up on the show. Thank you so much, Hemant, for taking time out and helping our viewers with the financial portfolio queries today. And to our viewers, I'm going to leave you with our WhatsApp number and email ID. Do send across your questions on our WhatsApp number and email ID, and we'll get it answered live on the show by our financial expert. Thank you so much for watching. Goodbye.